Market, James, we saw less than $3 billion worth of stock being traded, and that's because we saw so many markets around the region close. Japan, Hong Kong, Korea, and that really impacted on trade today. It was, however, a big day in terms of economic numbers. We did see the RBA rates decision. That had a very small effect in terms of the market, but we also saw consumer confidence at a 5-year low, and that's important because we will see the budget out in the next week, so it's going to be interesting to see whether we do see consumer confidence further hit by some of those budget cuts which are expected. We also saw in terms of the market green across the screen. Every single sector was trading higher with the one exception of the property space, but it was the healthcare space which stood out with a gain of more than 1%. The consumer discretionary sector also lifted by David Jones's very strong third quarter sales numbers, but all in all a very quiet day for the market. Low volumes going through, but a positive one. We will see some good numbers coming out of China. Unfortunately, the big set of numbers that we are watching are the trade numbers out of China on Thursday, and the last couple of months have been very disappointing from an export as well as an import point of view. So if we do see those numbers coming ahead of expectations, and especially the import side, if we see growth there, that could be a positive for the Australian market. Today on the market, if we have a look at some of those miners, it was the nickel miners as well as the gold miners which saw some support. Nickel prices at a 15-month high, and that's really because of the Ukraine prices. We know that Ukraine is one of the biggest producers of nickel in the world, and of course gold prices also seeing some safe haven buying. So unfortunately it wasn't the iron ore miners, which are closely tied to China, which did see an uplift in terms of the market. In fact, Fortescue was down during the session. So we'll be watching those China numbers, but also domestically we'll be watching the job numbers out on Thursday. We've seen a couple of months of stellar growth in terms of those job numbers, so expecting to see another positive number there with growth of 8,500 jobs. Oil Search and Santos are the growth stocks in this space, and Oil Search is particularly interesting at the moment because there's a lot of speculation that we could see Woodside making a play for Oil Search. Now this speculation really comes about because of the stall that we've seen in terms of the Leviathan oil field and that deal between Woodside Petroleum and the Israeli gas partners over there. So if that deal does fall through, it does mean Woodside Petroleum would have some money to play around with or return back to shareholders. Of course, if we have a look at the growth areas of the market, it is really that LNG space. So the Papua New Guinea LNG project, the Gladstone LNG projects are the two that are really coming online over the next couple of years. And of course, Oil Search has a big coverage to that Papua New Guinea LNG project. So I think Oil Search not only supported by its profile at the moment, which will see it go from exploration to production, and production earlier than what the market anticipated, but also a bit of speculation around a possible takeover from Woodside Petroleum.
Where does Lynas, Julia, sit in your estimations of potential investment options?
It's a difficult one. I mean, Lynas, the shares are down 50% in the year to date, so we haven't seen a good performance by Lynas. Now, a lot of that share price performance is because there had been speculation around a capital raising, and today that was confirmed. They're looking at $30 million through a share placement plan, and then another $10 million top-up through a share placement, so $40 million altogether. Now, usually if you do see a capital raising like this, you'd hope it's for investment purposes, but in the case for Lynas, it is for short-term working capital purposes, and that is just to keep its operations ticking over from day to day. Now, Lynas, if you have a look at it as a company, it will be cash flow neutral once it hits 750 tonnes of sales a month. That means it needs to triple the amount of sales that it is seeing at the moment to be able to reach that rate. Having said that, there are some positives around Lynas. We have now seen 4 quarters worth of growth in terms of production as well as in terms of sales, so that's going in the right direction. Unfortunately,
that's
the share
a bit
price...
thin, Julia. You're scratching there, aren't you, for big positives of Lynas?
But unfortunately, the share price going in the opposite direction, and Lynas was one of the worst today. Underlying profit up by 29%, margins quarter on quarter up by 2.8%, year on year up by 0.5%. The strength really coming from the infrastructure side as well as the oil and gas construction. The negatives for Leighton's, however, remain liquidity because of that hot chip takeover. So the fact that we'll probably see Leighton positions being removed from the index in a lot of fund managers' portfolios due to the liquidity part, and also underclaims is still an issue there. So looking at Leighton's, some positives in terms of this result. They've also reiterated their full-year guidance, but also some negatives for investors to be aware of as well, and that's mostly because of the liquidity concerns. But if investors are longer-term holders, they don't really have to worry too much about that, and may actually be an opportunity with a lot of the institutions being forced to sell out of Leighton's shares because of that takeover.
Look, another interest very much around David Jones' numbers. Q3 sales, of course, the first set of numbers we've had since the Woolworths takeover bid, of course, getting Foreign Investment Review Board approval today. Julia, what did you make of the numbers and the outlook for this company?
A very strong set of numbers coming through. Total sales was up by 4.1% compared to expectations for growth of 3.5%. And on a comparable basis, we saw growth of 2.4% compared to expectations of 2%. So it looks like that very strong momentum that we saw back in January and February has continued, and it means that David Jones is on track for the first yearly growth that we've seen in sales in 4 years. So very positive there. However, having a look at David Jones, the outlook's really dependent on this takeover offer from Woolworths South Africa. If we have a look at trade in David Jones just over the last 2 sessions, this is what it looks like. Now, what you'll see is today a very narrow trading range, in fact a 2-cent trading range, despite the very strong result coming through. And that's because the key driver of David Jones' share price at the moment is that bid at $4. The share's still trading below that $4 mark. We haven't seen any counter bids coming through, so it is expected that that Woolworths bid will be successful for David Jones. One of the other things to watch out for with David Jones is consumer confidence. We saw those consumer confidence numbers out today at a 5-year low, and if we do see very strong budget cuts, then that could impact in terms of spending for that retail space. But the fact that we saw a very strong sales number coming through for David Jones, great news for some of the other retailers out there today. Pacific Brands was up by 6%. We also saw Premier Investments gaining 1.5%.